All right, it's just you and me. Let's cook. We're going to take a look at the markets. We're going to start off here with Bitcoin. And as you can see, we are getting close on the bottom oscillator to potentially taking on a 25% position. I've already opened some leaps in terms of an options play just because of how oversold we are on many different metrics, some of which I'll show here later in the video, but still technically bearish for Bitcoin, at least currently for the time being. By the way, happy July 4th weekend out there. And we're going to move really quickly to Ethereum here. Same thing, close, really close to going potentially at least 25% long. So monitoring this over the weekend. Gold still decisively bearish, so no change there. And we'll take a look at stocks. I mean, currently the S&P 500 still kind of just chopping around in this upper zone, so nothing's really changed there. What was interesting to me this week is I got an alert for Solana. So Solana is actually pending a full size up here to 100% position via the 8th rule on the meme coin settings. This is already at a full position. So for my altcoin satellite portfolio, I've actually already taken a long on Solana itself at around $78. So I'm continuing to watch how this plays out. But crypto as a whole, starting to hopefully at least either bottom out here or turn around. We'll see if that's actually the case or if we have more pain ahead. But currently, those are the signals for Solana, Bitcoin, Ethereum, and gold. And if we jump into the actual portfolio, at least what I'm running at the moment, I am still 35% in S&P 500, 21% in QQQ, and the rest in cash. We are still in a risk on Goldilocks regime, although you'll notice here probably that the risk on votes are 24 to 22 risk off votes. So very close in terms of the strength of the signal is not as high as when we were, 25, 26 to 15. So things are slowly starting to change, at least underneath the surface. If we take a look at the actual signal, you can see we've been risk on here for quite a long time. So if this does change, obviously all my Substack subs will get the signal first. So if you're not part of the community, definitely check that out in the description. And if you're enjoying the video, you know what to do with all those buttons down there. I appreciate it. If we take a look at the zoomed in version here, you can see that clearly we've been risk on for quite a while, and the votes have just slightly shifted a bit more bearish in this last week. So nothing though has changed in terms of the signals for the portfolio. As you can see, SPYM still holding that. I am filming this on Friday and releasing everything on Saturday because I'm going to be in Miami for the weekend. So doing this a day early, everything is closed in terms of the markets today. So no real changes. I did add one contract to my SPY bull put spread, but this has stayed the same. And I have started a position in IBIT in terms of leaps. So I wrote a whole post on Substack about what I'm kind of doing here, but I have a few bull put spreads that are out, over a year. I have a couple of calls that are out over a year. And then I have a short call that's 28 days out. That's just giving me some protection, basically a poor man's covered call. We're doing a Seagull with the bull put spreads financing the naked long calls. So as soon as the 8th rule turns bullish, if it does, I'll be adding to this position up to a max of about $5,000. So regardless, that's the portfolio at the moment. And we can take a look at some of the data. So for macro weather, nothing has changed here. Still a tailwind for stocks, a headwind for bonds, and a tailwind for Bitcoin. For global liquidity, this was probably the most abrupt change this week. We went from easing to tightening. You can see the rate of change here for M2 has dropped pretty negatively. So we have a negative rate of change for that. US net liquidity still no real movement here, although you can see the Fed balance sheet is slightly increasing over time. So keeping an eye on global liquidity, but nothing too major just yet to call out here. For financial stress, green across the board for the SOFR Fed funds rate, for the VIX, and for the MOVE bond vol. But for the DXY, we have broken out above 120, although we did kind of retrace a little bit this week. But keeping an eye on that, obviously you want the dollar down for risk assets to go up. So if we take a look at the releases this week, and the big one was the ISM. So the print came in 53.3, a little bit under the forecast, but still above 50, which is good. We're still in expansionary territory. JOLTS job openings kind of beat. Consumer confidence came in a little bit lower than the forecast, and the unemployment rate actually came in 0.1% better than the forecast, which is good. And if we take a look at what happened with the Fedwatch odds in terms of interest rates, cuts, or them raising for the end of July, there's a 20% chance now. I think this was a little bit higher last week, so this has come down a bit in terms of them potentially hiking. If we go out to September, there's about a 50% shot that they're going to hike. And for October, more than likely, we have a hike and potentially a second hike by the end of the year. So hikes are being priced in. We'll see if Kevin Warsh actually pulls the trigger, but that's pretty much it for the Fed watch odds. In terms of the on-chain data, nothing really too crazy here to call out. We did have the adjusted M ratio sort of in the gutter. Block P&L count continues to signal a bottom. And for the supply and profit, you can see we are almost touching the oversold levels here. So I have a bunch of these charts also available on my website now for free. So definitely check these out. I shared this one earlier today on my X, but you have the fear premium at 89 out of 100 all the way down here at the bottom, which has historically signaled great prices to begin picking up some Bitcoin or starting some DCA or some long positions. Obviously not financial advice. Do your own research, yada, yada, yada. But I thought the other interesting one was the mean reversion index, also here almost at the bottom, and global liquidity fair value as well, throwing a signal that we are at bottom-like prices here. So regardless, definitely check this out. This is interesting for you. There's a lot of full cycle indicators on here that could help you make better decisions when it comes to Bitcoin specifically. If we take a look quickly at the weekly RSI, hopefully we put up a bullish divergence here. We'll see how the price action plays out. But regardless, things are looking good in terms of potentially finding the end of this downtrend for Bitcoin all the way from 120 to the high 50s. I think people that are waiting for 30K or 40K are going to be sorely missing out. The market never does what you want it to do, and it usually does what you least expect it to do. So we'll be keeping an eye on all this. If you do want the latest analysis and what moves I'm doing with my portfolio, definitely check out the Substack. Link is in the description. Otherwise, keeping it short for this one. I have a long weekend to get to, so I appreciate you hanging out with me as usual. And if you did enjoy the video, you know what to do with that like button and the subscribe down there. Thanks for hanging out. Have a great 4th of July weekend. Stay safe out there, and I will see you for the next one. Cheers.